How does Leslie, you're a stunning leading trader? Hope you're well. So a tremendous sell-off on the stock markets, in fact, today, but really started about a few days ago from last week. And what you see here is that the stock markets, the S&P and also the Dow, have come down now to some key levels, which I'll talk about in this video. But let me just first of all mention this, that I talked about this event coming up, in fact, about a week ago, which is over a week ago. And this was in the video which I posted to you, which, as you can see here, the warning signs for stock markets are adding up. Now, I was perhaps a week a bit early, but nonetheless, the warnings were there, and I mentioned them in this video, as you can see here. So, as I was talking with Nick at the time, I showed two paths for the stock market, but as it happens, the path that actually panned out was more or less this green one here. So the markets continued to rally higher to about 28.73, and then boom, we had that drop that we saw in the very recently. Here we are. So this is the chart of the S&P. And by the way, the chart of the Dow is more or less very much similar to this, as you can see here. So everything I mentioned here about the S&P can be applied to the Dow as well. Okay, let's go back to the S&P. So what you can see here is that we've come to a key level on the market. That's the 100, again, the 100 exponential moving average, the orange line on my chart. Key level that has been tested many times. And also that happens to be very similar to the 21 EMA on the weekly chart. Okay, so that's also now being tested. The question is now, can we hold these levels? And are we due now for a bounce? In fact, let me just say this. The last time we tested this particular level, the 100 EMA, let me just show you. Let's go back. Okay, there it is. The last time this level was tested, and look at that, it bounced off it. That was back in August. Look at that. It dropped back to the 100 EMA right there, and then boom, it carried on from up there. Now, there may be some more selling pressure involved. We'll have to wait and see. But in any case, what we can see is that, well, first of all, let's explain what's going on here. There's a lot of folks who joined at the worst possible time. There's a lot of the retail, non-institutional traders and investors who jumped in at possibly the worst moment when prices were at these highs. Because essentially what's happening is these folks felt they were missing out on this move. So there was a report that showed that there's a lot of buying by non-institutional investors right about this time. Again, a big mistake. And by the way, notice that our LT trend, the indicator I talked to you about, our LT trend would have kept us in this trade as long as the bars were blue. And once we got those two consecutive reds right there, then we got out. Okay, that would have been our sell signal. And of course, if you were trailing your stop loss on the LT velocity, then you'd be out on this bar, on this candle bar right there. So one of the great things about these tools and indicators are it tells you how long to stay in and when to get out as well. So what about now? First of all, what's been going on here is that a lot of the folks who joined very late, they went into margin calls. So imagine if let's say, for example, imagine that someone joined at these worst possible moments. Well, if the market's going against them and if they're using leverage, if they're using options and all kinds of leveraged accounts, suddenly they go into margin calls. And when those margin calls happen, those accounts, those positions have to get liquidated, resulting in more selling pressure. And again, this is what you see. Okay, and of course, then short sellers join the market and there's more betting against the market. I do think, though, right now we're short-term oversold. And I think it's quite likely we might actually see some kind of bounce, a temporary bounce. Now, the big question is this, and this is something to consider, which is that is there more to the sell-off to come? Because one thing that we know about Elliott wave theory, and I mentioned this before, according to Elliott wave theory, after a major rally higher in a market, what you then see are the ABC moves, okay? A, B, C, okay? Let me just show you what I mean. Let's just go back to that previous movement that I just showed you. Let's go back to this. There one. This is the move in August. A perfect ABC pattern, right? You see right here. Take a look at this. A, B, C. Okay, a three-wave pattern which ended, by the way, right on this 100 moving average. And then what do we see? The beginning of a new trend higher. Okay, what we need to see now, and in fact, if I just move my chart a little bit to the left here, the big question is this: is this all the selling we're going to see and then a move up higher to retest the previous highs and, of course, perhaps new highs? Or is it likely that we're going to see an ABC wave pattern forming? In other words, a move higher to test resistance. That would be our B wave, and then followed by C. And of course, that would be our A wave. Okay, so that's really the thing to watch out for. All right, guys, hope this video helps. And until the next update, have a fantastic week. Bye for now.